Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, December the 6th. The year's 2019. Let's talk trading. It's time for the weekly wrap up. And I guess I should also say it's NFP Day. I don't remember. Maybe I neglected to give you that heads up that was NFP Day yesterday. But you should know that first Friday of the month is NFP Day. There are some exceptions, like if the first day of the month is also the first Friday of the month, I think they usually push it back a week. Okay, so this week and this month so far, I know you have been using your money and risk management like a pro. And here we go on the week. We've got 1, 2, 3, 4, 5 pairs that haven't filled the gap. Now, something could happen between now and the end of the trading week, which is just, what? About 4 hours from now, right? Or maybe a little bit longer. 4.5 hours. But it looks like this is going to be one of the weeks where they didn't all fill. But that's trading. You just have to realize that you're not going to win each and every time. But when you stack them up, sometimes you can even lose more trades than you win. But because of your excellent risk and money management, you are in profit rather than in loss. But remember, boys and girls, fellow traders, these videos are for educational purposes only. Your results may differ from mine. And that trading is very, very, very risky. You can lose all your money. That being said, if you're looking for financial advice, financial guidance, seek it from an accredited financial professional. That way, when you lose all your money or a lot of money, you can have that warm, fuzzy feeling that you got your advice from an accredited financial professional rather than just by watching some YouTube video or listening to somebody on a trading forum on the internet. So for the dollar yen, as you can see, it poked below previous week's low, poked above previous week's high. So this is an outside bar. And we're 17 pips off of that weekly low. For the year, 105 pips below that yearly open, and you can see everything turned red. Okay, here we go. We got inside the first trading days of the year range right here. We almost got inside the first trading day of the week's range right there. But you see here, that was rejected twice before. And then you see here, we've also pushed through the low of the first trading day of the year 1 time, 2 times, today a 3rd time. So, I say trade what you see. If you look at these charts, you can see what happened here. Granted, today was NFP Day, but still you can see the results of this horizontal line right here. What happens when you trade when price crosses it. Here, when it crossed above, there was a nice move to the upside. Here, down and back above with a continuation. People might say that's hindsight, but we look at the same charts every day, and these lines rarely move, meaning that first day of the year, that's not moving. First day of the month only moves on the first day of the month. And then first day of the week, that only changes the first day of the week. And as you can see here on the weekly, we got weekly range 130 pips, and it crossed below and just pretty much stayed down. And you can see here, it had a little bounce, which then we bounced the other way off of that area. Inside bar traders, we're inside that weekly inside bar here 2 weeks ago. And I hope some of you inside bar traders took advantage of these inside bar trades this week. We had a bunch of fresh inside bars, that is. Okay, 5 pairs over 100. Now, think about that. It was NFP day, non-farm payroll. And if you look at the pairs, not a single U.S. pair has a range over 100. Now, dollar Canadian, 98, but you can see here the U.S. pairs, the non-farm payroll seems to be having little to no effect. On the dollar yen, you can see what it did here once again, exited out of the previous day's low, and then it's bounced off that low, and it's in the rat zone. But we don't have enough ranges. We'll see in a couple of charts here. Here's the daily H1 highest open. Happened a couple hours ago off of that news right here. And you can see lower high, and then all the way down to the monthly D1 lowest open and beyond. And we had the H1 lowest open right here on the day, and you can see that news just shot it up. So once again, you could either be a green rat, red rat, maybe Yale students even got paid today. Pivot point, close to the open, inside the buy zone right here. So no real bias, just take the trades as you see them off of the buy zone. And showing here, caution, range too low, but a nice move here in that M15 candle. Good for about 40 some pips. No, not 40. 38 pips is what it was good for. But then again, with the spread, you know, if you would have taken out 35, that would have been the lion's share for sure. Looking at the pivot, you know, we took out the pivot. Let's take a look at the missed pivots. We've got one this month right here. We got one for last month right there. And we've got a few more throughout the year. Price action, clear as a bell, 3-ball, green at the line, pro trade or news trade. In fact, the trader asked me the other day if I avoided the news. It's like, oh no. I love the news because that's when you get all the action. And, you know, price is moving, you can jump in, and that's where you can start piling up the pips really quickly. But remember, boys and girls, these videos are for educational purposes only, and your results may differ from mine. Wick zone, in and out, back in, back out, back in and through, in and out. So, I mean, right here, you know, just trading, once again, lower highs should be obvious to the viewer, right? Trading what you see. And looking here at the range gauge, you see we already put in the range for the week. Hit that, or put in the range. We actually hit the weekly ATR zone here. On the day, you know, for your news traders, this is something you might want to look at here. We're looking at the H4 bar, but you can see it came up to the weekly open minus the ATR and reverse. So you see here, here's the weekly open, came in there and reversed, came all the way down to the ATR, came back halfway, and then reversed again. So this is another way to play it. Usually you're trading towards it this way, but once it's in the ATR zone. When you come back, this halfway point is if you enter here, this is a place to look to take profit and or look to reverse again. So you see here, it came up. You've taken your profit here and then look to reverse and been paid off. But if you're strictly long above the daily open and short below, right here, you're below the weekly open, hit that daily open and take that short right at the line, daily open cross, and it would be paying off again. Call it hindsight if you want, but we can trade away from the open every day. We do that with the buy zone. But this is when you're looking at the chart and the day started here. Okay, it's already moved away from the daily open. Now it's come back up and through. Now it's coming back down. You've got a second opportunity right there. So that daily open cross. And I think if we go back, where is it? I wish we could label these somehow, but really can't. You can see here's a daily open, a long, a short, a long, and a short based on the 1 hour chart. Just trading with the H1 candle color. Nothing that difficult, really simple. Because remember, the reason you enter the trade has no bearing on what happens next. Okay, so you have your method. You make sure you have your money management and your risk management in place so you don't lose more on that trade, because once you enter, it's up to the market, right? All you can control is your position size, the direction you're trading in, and where you locate your stop. So, and as I mentioned previously on other videos, if price is going against you, you don't have to let it go all the way to your stop. You can cut your loss whenever. You just don't want it to go past your stop. So some traders kind of misinterpret that. But if it's obvious to you, the trade's not working out, doesn't look like it's going to work out, there's nothing on your screen telling you it's going to work out after you enter the trade, then scratch it. And so anytime you exit a trade with a loss that didn't hit your stop, let's just say we'll call that scratching the trade, okay? It's like, no, this isn't happening. And there was one other thing I wanted to mention about trading. When you enter a trade, let's see, where's the balls? Right here. Okay, we're looking at an H1 chart here. And let's just make this a little bit wider here. And you're entering a trade. So, for example, let's pick right here. Price went up, and then it was going down, and you decided there's a 2-ball at the top. You want to get short here. Okay, it looks like you might have picked up a couple of pips. Let's see, what's that low? 77. Okay, so if you got in at 80, chances are with the spread you would have seen 78. And then all of a sudden it comes down and starts coming back against you. And you think, well, maybe I should wait. And in this case, looking forward, it would have. But in the moment, you might think, or you might come to the conclusion that, this sucker could have momentum this way. That's a possibility. You have to consider the negative side of what could happen before you think about the positive side. So right here, you might have just scratched that trade. You might have scratched it above the line, or you might have just break even plus won it. But that's something you need to do as you trade. You have to also contemplate what it could look like if it's going against you. So, fellow traders, I hope you had a good NFP day. I hope you had a profitable trading week. And so when you come back next week, remember, it's not what you trade, it's how you trade it. So, drain the banks.